Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at iron.
If you find our talks useful, please consider subscribe, like, and comment underneath.
So I want to start today with a concept that usually spells disaster for a company.
Oh yeah, what's that?
An identity crisis.
Right, yeah,
But-
that's normally the kiss of death. A company just doesn't know what it is anymore.
Exactly. But sometimes, very rarely, it's not a crisis. It's more of a metamorphosis. And that's what we're looking at. A company pulling off one of the most aggressive pivots we've ever seen.
You're talking about IREN, and for a long time, the story here was, well, simple. They were a Bitcoin miner. They plugged in machines, they solved algorithms, they got Bitcoin, end of story. And for a lot of people, that was enough.
That was the old headline. The new reality is that iron is very quickly becoming a high-performance computing and AI cloud titan.
So they're not just mining anymore.
Not at all. They're basically powering the brain of the internet. And the market is reacting like it's seeing a gold mine.
It's definitely reacting. I was looking at the price action, and the phrase melting faces actually popped up in some of the research notes.
A bit graphic, but it fits.
It does.
I mean, when you see a company like this surge 14.6% in a single day, melting faces is kind of the right term.
That is not normal, especially for a company that, at its core, just builds warehouses full of computers.
Right.
But before we get too carried away with the rally, we have to talk volatility. This thing moves fast, both ways.
It absolutely does, and we will get to the risks. But there's a huge anchor here now. We have to talk about the deal, the one that changed everything.
A Microsoft deal.
The $9.7 billion AI cloud arrangement with Microsoft.
Okay, let's unpack that. $9.7 billion. That is not a pilot program.
No, this isn't dipping a toe in the water. This is a cannonball.
So what are the terms?
The deal is targeting $3.4 billion in annual recurring revenue, ARR, by the end of this year, 2026.
$3.4 billion. Just to put that into perspective for you, that's what some major software companies make after like a decade of grinding.
Exactly. And IREN is trying to do it in a sprint.
So here's the big question. Why IREN? I mean, Microsoft has infinite money. They can build their own data centers. Why are they writing a check this big to a former Bitcoin miner?
That is the core of this whole story. And the answer isn't about the servers.
It's not the chips.
No. Anyone with cash can buy NVIDIA H100s. The bottleneck, the real moat, is power.
Right. You can't just plug these things into a wall socket. We hear about grid congestion all the time.
All the time. We are in a global energy bottleneck. To build a new substation and get it approved can take 3 to 5 years right now.
And Microsoft needs that compute power today, not in 2030.
Exactly. They're in an arms race with Google, with Meta. They can't wait for permits.
So they aren't just buying cloud services. They're buying a shortcut. They're jumping the line.
Precisely. IREN owns the infrastructure and, more importantly, the renewable energy power access. They have the interconnection agreements all signed.
So in a world where everyone's scrambling for juice, they're the ones holding the extension cord.
They're selling water in the desert.
And the renewable part is key here, right? Microsoft has ESG mandates, shareholders to answer to.
Absolutely. They can't just go burn coal to run ChatGPT. IREN sites are mostly hydro and wind, so it's a clean deal. It's that combination of ready now and clean.
Okay, so that's the setup. High stakes, big transition. Let's look at where we are right now. Today is February 2nd, 2026. The stock's around $55.
But it's actually pulled back a bit.
Yeah, it's down about 17% from its recent highs.
And we are sitting right in front of their next earnings report on February 5th.
So the question for everyone listening is this dip a gift? Is this a discount or a warning sign?
And to answer that, we really have to look at the numbers they just put up in Q1. Because, frankly, they were shocking.
Shocking good or shocking bad?
Shocking good. Let's just look at the earnings per share, the EPS, the market consensus. What all the Wall Street analysts were expecting was a profit of about 15 cents a share.
15 cents. Okay, so basically breaking even.
IREN reported $1.08 per share.
Hold on. $1.08? They beat the estimate by almost a full dollar.
It's a 620% beat.
You don't see that. I mean, a beat is usually a few pennies. 600% suggests the analysts had no clue what was really going on inside the company.
It suggests the pivot is paying off much faster than anyone modeled. And get this, Compare that $8 profit to the same quarter last year.
Okay.
Back then, they lost 22 cents per share.
So in just 12 months, they went from losing money to printing over $1 a share in profit.
Exactly. It kind of puts a nail in the coffin of the AI is just hype argument for them. Hype doesn't show up as EPS.
Okay, but I have to be the skeptic. EPS can be manipulated. Asset sales, tax credits, what are the top line? Is actual revenue growing?
It is. They reported quarterly revenue around $240 million. That's up 28% year over year. But the forward look is where it gets really aggressive.
The guidance.
Yep. Analysts are now forecasting the full year 2026 revenue to hit $1.192 billion.
Whoa.
That's 138% growth from 2025.
So they're more than doubling revenue in a single year. That is a heavy lift for an infrastructure company.
And they're doing it efficiently. Their EBITDA margin is projected to expand to nearly 55%.
55%. For anyone listening, that is incredibly high. That's like credit card company level margins.
And their net margins recently hit almost 87%.
Wait, stop. 87% net margin. How is that even possible for a data center company? That sounds like a typo.
You're right to question it. That 87% is probably an anomaly.
Okay.
It likely includes things like revaluing their Bitcoin holdings or maybe some one-time tax benefits. It's not their steady state margin. But even if it normalizes to, say, 40 or 50%, that's a cash machine.
That makes more sense. But with all this growth, all this building, I worry about the balance sheet. Can they afford it? Are they going broke to get bigger?
It's the classic trap. But their balance sheet is surprisingly strong. Their current ratio is 5.52.
Can you break that down for people who don't stare at these all day?
Sure. It just measures your ability to pay your bills for the next year. A ratio of 1 means you have just enough cash.
Okay, so you're surviving.
Right. IREN's is 5.52. So for every dollar of debt they have due soon, they have $5.52 in cash ready to go.
Wow. That's not surviving. That's a war chest.
And their debt to equity is low, just 0.34. They're not over-leveraged.
Yeah.
And here's the key thing. No dividends.
Which is what you want to see. If you can double your revenue, don't send me a check, keep the cash, and go build more stuff.
Exactly. They are pouring everything back into the engine.
Okay, so fundamentally, the engine is hot. Let's pivot to the charts. The stock's at $55 today, but the 52-week range, this thing is a roller coaster.
It's incredibly wide. The low was $5.13. The high was $76.87.
Think about that. If you bought at $5, you're up more than 10 times, even with this pullback. But if you bought at the top, you're feeling some pain.
Which brings us back to that question. Is this 17% drop a falling knife or a buying opportunity?
What's the volume telling us? Is it dropping on high volume with people fleeing?
It looks more like accumulation. The volume is high, yeah. 48 million shares versus an average of 39.
But the price is sort of stabilizing.
Exactly. That divergence high volume, stable price often means the big players are stepping in to buy what the smaller, weaker hands are selling.
But we have to warn people about the beta here. I'm seeing 4.25. That is insane.
It's extremely high.
And just to define that, the market, the S&P 500, has a beta of 1. A beta of over 4 means if the market goes up 1%, the stock might go up over 4%.
But the reverse is also true.
Right. If the market drops 1%, this could crash over 4. It's a leverage play on the market.
It absolutely is. It is not a stock for your emergency fund.
So if you can stomach the swings, where do the analysts think this is headed?
Well, the targets are sitting around $80 on the conservative side.
That's the conservative view. That's almost 50% up from here.
Yes. The really bullish models, the ones that assume the Microsoft deal scales perfectly, they go as high as $580.
$580? That's a 10-bagger from here.
That's the absolute blue sky scenario.
Yeah.
But even the consensus targets suggest an upside of around 88%.
Which brings us to the narrative, the story. I'm seeing headlines. The NVIDIA of data centers.
That's the story taking hold. We've seen it before. A company gets re-rated. IREN is shifting from dirty crypto miner to clean AI infrastructure. And when that happens, the valuation multiple expands.
And the news sentiment backs that up.
It does. Our quantitative score is bullish. 4 out of the last 5 major news items were positive. The press loves this pivot story.
But I did see a conflict in the institutional data. A bit of a smart money fight going on.
You're talking about Gladstone.
I am. A major fund. And they cut their stake by over 50%. They sold a lot.
That's a red flag on the surface.
It is. if the big guys are selling, why should I be buying?
But at the very same time, you have other funds like Farther Finance and Y-Intercept, and they're accumulating shares. They're buying.
So why the split? What's going on?
I think this is pretty typical during a big pivot. The original investors, maybe they were in it for the Bitcoin thesis. Now the story has changed.
Or they're just taking profits. If you bought at 5 and it's at 55.
You're selling. No one ever went broke taking a profit. So it's a rotation of the shareholder base. And overall, institutional ownership is stable, around 41%. And analysts are overwhelmingly positive. 15 of 21 have a buy rating.
Okay. We've laid out a very strong bull case. Now I have to do my job and worry. Let's hit the bear case. Because they are still a Bitcoin miner, right?
They are. And that is risk number one, crypto dependency. A big chunk of revenue still comes from that.
So if Bitcoin crashes tomorrow, their revenue gets hit hard.
It does. And the stock still moves with crypto. The trading algorithms haven't fully separated the two yet. So if Bitcoin has a bad week, IREN probably will too, no matter what Microsoft is doing.
Okay, what's next? The AI party hangover.
It's a real fear. The risk is that AI demand cools off. Right now, everyone is panic buying compute power. But what if they realize they don't need it all?
Then that $3.4 billion revenue target starts to look pretty shaky.
And that leads to execution risk. They have to build all this stuff. It's not software. You have to pour concrete, install cooling, deal with supply chains.
Any delays, any chip shortages from NVIDIA.
Or if interest rates stay high, that makes all that building more expensive.
Yeah.
Now, as we said, they have a lot of cash, but it's still a risk.
And finally, let's just say it again. Volatility. This stock has massive swings. If you panic sell, you will lose money.
You have to know what you own. If you check the price every hour, this stock will give you an ulcer.
So let's bring it all together. The verdict. We have a DIT coming up, February 5th.
That's the catalyst. The Q2 earnings report.
What's the market looking for?
Proof. They just want proof. They want to see the AI revenue ramping up on the books, not just in a press release. They want to see that line item growing.
So, final call. If you had to score this, potential versus risk.
I'm giving it a bullish score of 9 out of 10.
A 9? Wow. I expected maybe a 7 given the volatility. Why so high?
Because the pivot is real. That $0.08 EPS beat was the proof. It shows they can make money from this. And the Microsoft deal, it provides guaranteed revenue. It takes the guesswork out of the next few years.
It anchors the whole thing.
Exactly. Even if Bitcoin struggles, that contract makes it a viable, growing business.
And the valuation.
After this dip, it looks cheap, especially compared to peers like Marathon Digital. IREN has a much more resilient revenue stream now.
So the strategy here is...
This is a multi-year hold. You're not flipping this for a few percent.
Yeah.
You're betting on the core infrastructure of the next decade of technology.
And I'll just add my closing thought. Don't forget the renewable energy part. That proprietary power asset is the real hidden gem here.
It really is.
You can buy chips from NVIDIA. You can buy servers from Dell. You cannot just go out and buy a plug for the renewable power grid. That takes years. IREN has skipped that line. That is their moat.
Couldn't agree more. That is what keeps competitors out.
That's the lowdown on IREN. A higher risk, high reward play on AI infrastructure hiding inside a Bitcoin miner.
If you found this valuable, remember to subscribe, like, and drop a comment on what stock we should analyze next. We read every single one.
We'll see you in the next one.